The assassination attempt on President Trump is a horrific event. And today we're going to talk about real estate, what that means for us, and how interest rates are going to fundamentally change to create massive opportunity for you. This is spicy.
This is a heavy one. It's just about, I want to say, half a week since maybe one of the most historical events in our country. And of course, we want to be very sensitive and honoring of people who got hurt or lost their life. But today's podcast is talking about the relationship between what happened last Saturday, which was attempted assassination of Donald Trump, President Donald Trump, former President Donald Trump, and how real estate will react in the next 6 to 12 months because of it.
Yeah.
Obviously, the election always determines it. Why don't you tell me, though, because I'm curious before we get into it. I don't know if this is where we should go first, but how has elections in the past affected real estate?
Yeah.
And gives us a baseline?
Absolutely.
Because this totally takes it another direction or maybe accentuates the direction it normally would go.
So generally speaking, when you go into a political election, what happens during the election cycle?
People are looking at debates, paying attention to policy and politics, and they're just paying attention to like the TV and social media way more.
Bingo. So during the political cycle, you get bombarded by ads. The emotion goes through the roof, and then also the fear goes through the roof because most of those ads are very fearful. Well, real estate, because this is, one of our basic human needs, shelter. So the real estate market then responds to that. How does it respond when a bunch of fear is dumped into it? Transactions generally slow down. Activity generally slows down. The second thing that responds is the stock market responds. The fear and the uncertainty cause people to slowly sell out of stocks and flee over to bonds. So the three things that happen is, one, generally transactions slow down. Two, generally the stock market cools down. And three, interest rates usually go down just slightly. I had one of our lenders go do the research, and anywhere between a quarter to a half a point, so an average of like 0.33, a third of a point, it goes down because of that uncertainty. So that's generally what happens during an election. We're going to get deeper into that as we go. But no, that's the general thing that happens. And what I want to do is I want to lay the groundwork here for like what I want our listeners to be thinking about. So this week is like, we're going to share some insights, and this sounds political, but this is not political. We're just talking about this is an event that was a horrific event, a threat to our democracy, a threat to our society. The last time this happened, were you even born when Reagan got shot?
No. Were you?
Yes. So, I mean, I was like two or three.
Yeah.
But it's still in my psyche of what happened when Reagan got shot, because I have a recollection of that. And so you have this assassination attempt on a former U.S. president, which now, in my opinion, looks like he's going to win and be the next president because of this. So if I go back to my childhood, I don't remember anything other than there just being uncertainty. And then all of a sudden, Reagan is everywhere. And when I went and did the research, Reagan's approval rating when he got shot went up 22%.
Was he up for re-election?
He was not up for re-election. I think it was in the end of his second term. I also think his health was starting to decline. But that's kind of irrelevant because the American public, we love an underdog. We love rooting for someone to win. When one of ours is hurt, we want to help. And I think that's more of the sentiment that I believe is going to happen here, is that all of a sudden you've got massive support for one specific candidate coming in. And the problem with this is 3 months ago, I'm telling our real estate sales team, I'm saying, everyone, get ready for your regular election season this fall. And I mean, transactions are going to drop 10%, activity is going to drop a bunch, and that the buyer is going to be more skittish, the seller is going to be more skittish. We're going to have to over communicate with buyers and sellers. We're going to have to over communicate with our investors. And then PS, by the way, we're going to go hunting for deal season, because it's always deal season, especially during the latter part of the year. But during an election year, it's like deal heaven, deal nirvana. And so that was my words. Then we have the presidential debate, and Joe Biden gets up, and Joe Biden fumbles the presidential debate and demonstrates cognitive decline. And you know it's bad when one side of the media, which generally supports Joe Biden, so the liberal media, starts attacking him. He starts getting denounced by everyone.
It's like when they get fearful, they get truthful.
That, and everyone wants to back the winner. And so when their guy's not winning, they start, backing the other horse or pulling away. George Clooney last week or earlier this week put an op-ed into the New York Times basically saying, hey, I want you to resign. And he's friends with Obama and did like a massive campaign fundraiser. So for him to step up and be like, okay, this is a problem. So that massively changed the approval rating. So I was sitting around going, I wonder what's happening. And I don't usually pay this level of attention to politics, because to me, the presidential race turns into a lot of noise. And so I try to ignore some of the noise that's happening. But as I'm paying attention, this horrible event happens, okay? He essentially gets shot at. And, luckily at the last minute, or God or whatever, turns his head, nicks his ear, falls on the ground and says, hey, you can hear like he's in a little bit of shock. I listened to this a few times. Did you listen to it a couple times?
No.
He
asked for his shoes.
Yeah, he's like, where are my shoes? I need to get my shoes. Then as he's grabbing his stuff, he gets that that intestinal fortitude, that fight mechanism. And he stands up and he looks at the camera and goes, fight, fight. And you get that kind of iconic photo that was just shot, where you have the American flag in the background, former president, grazed by a bullet, blood, Secret Service all around. And I look at that and I go, holy cow, the game of politics and real estate just changed. And that's what I wanted to talk to everyone about, is this idea that our subscribers and our listeners, we're trying to bring you what you can put into action that's going to help you buy a home, sell a home, invest in real estate. And when I saw that photo, my brain was like, oh, the election's over. And then, of course, over the next few days, you see a massive jump in approval ratings. So right now I go, well, what does this mean for real estate? So who is Donald Trump? Give me your 10-second, 30-second synopsis.
Definitely a successful businessman and New Yorker, pro-capitalism. He's a former president. Knows a lot of people.
Bingo.
A lot of business people.
Yep.
Well connected in the financial industry. And now is kind of becoming an American hero of sorts to certain people. Of course, there's some people that just won't ever sign up for that. But that's what I think about. And I actually thought about this the other day after this happened, because I know we're going to get into it, but I just have to say it.
Yeah.
The opposite's happening in the business world, right? Stocks,
Yes.
crypto,
Yes.
all spiking up. Like this
Yes.
morning, I even saw, it's like, why is the stock market hitting all-time highs right now?
Yes.
And I thought, you know what? It's people believe in the businessman if he gets back into office. So that's why I was thinking about, what does Trump represent? Because whatever people believe about him is what's motivating them to make their decisions in investments and in business right now.
Absolutely. Where did Trump make his money?
Well, I think a lot of it was New York real estate and marketing too.
Yeah.
Because his name is licensed out.
Bingo. the money was started in real estate, and then of course, yes, made it in marketing and things like that. And so what I look at when I look at this is we have a pro businessman, we have a pro real estate guy, we have a capitalist guy, we have a U.S. centric individual. In other words, I want manufacturing at home. I'm even going to put up some tariffs, which could be very inflationary against other countries, and I'm going to do that. And then I went on, X, aka Twitter. I went on Facebook. I scrolled through the news feeds. I wanted to get the feeling of what's happening. Here's the feeling. A vote for Donald Trump is a vote for your pocketbook, for higher wages, for less inflation, for getting back to a good economy. A vote for Biden right now, and I'm just telling, this is not my opinion, I'm giving you like a synopsis of the headlines, is I want higher inflation, continuous government spending, and I don't believe things would get better with the other candidate. I think that's why it's pushing so hard in his direction. So for us, for our audience, the big thing I want you to hear is we have a pro real estate individual who made the start of their fortune in real estate, getting into office right now at a time when the economy is transitioning. Well, real estate itself, as the economy started transitioning, what happened was the Federal Reserve massively raised interest rates to cool inflation. What happened to real estate? Well, the doomers, all the people who wanted prices to drop, said the market's going to crash and prices are going to drop because they don't understand supply and demand. There's not enough supply to keep up with the demand, even at low rates. But real estate did go into a recession. But it went into a different recession. It went into a transaction-based recession. So the level of transactions real estate is doing right now is below, we're going to trend below 4 million because, we hit about 4.2. It's slowing down again right now. So we're going to be below 4 million. So this is the same level of transactions we were doing in the Great Recession.
What year?
Depends on where you're looking at it, but it's basically 2010, 11, and 12 are kind of all about the same.
And how many transactions were happening? Below 4 million?
Yes, right around 4 million
Got it.
transactions.
So we're around that same time.
So we're around that same. Okay, now the market peaked out at like 6.4 million transactions. So the recession did happen. Boom, we lost all of that. Why? High, expensive debt. Where his fortune lies is mostly in commercial real estate. What sector is getting beat up the most?
Commercial.
Because of the cost of debt. So our crystal ball looking out, and we're going to dig into this a little bit deeper, is this individual is going to do everything humanly possible, because all politicians do, so I'm not faulting him, all politicians do, to line their own pocketbooks and to promote an economy that supports their way of making money.
And this is why so many business people would be quick to start supporting him, because the sympathy people generally have for someone that got just shot at and now is kind of like standing up, right? To still do the right thing for America. I'm just saying what generally people are thinking, especially as supporters. So now it's allowing these business people that are like, oh yeah, I can support them now. I can like raise my hand. You're seeing this in social media, like people tweeting it out, people making public statements, say I'm back them or donating to them. But the motivator would be, hey, it's highly likely this guy is going to get into office. He's going to be good for commercial real estate, good for maybe real estate in general, good for the economy, or at least that's what they think. Who knows what's going to actually happen? And then also, this is like kind of maybe a little bit off the notes here, but they're like, the writing is on the wall. If he's going to be president, I better be buddy with him.
I got to go bet on the winning horse.
Well, yeah, no, I'm just saying, like, I don't want to be on his bad side, because you know what it's like to be on his bad side. So I think strategically, you have to ask yourselves, like, if you know for sure he's going to be the commander in chief, it's better to support not only the winning horse, but not be on the losing side that gets the, I don't want to say the term, but the kind of like the side the side kid treatment. You know what I'm saying?
Yeah. That gets the bad end of the stick. No,
Yeah.
I totally get this. And the idea here is it's not only the businessman, it's the average American, because their pocketbooks are being so pinched right now because of high prices and
They
wages.
just want to change.
Bingo. And so when the American consumer's pocketbook is just hit, they vote for whatever their pocketbook is. And that doesn't matter what level we're talking about, from businessman to average person to, to whomever. We're voting based on our pocketbook. So what happens next? Once again, digging through the data for our listeners. Please subscribe. I do this for you. I do this for myself. This makes me money. The CME Fed Watch tool. Okay, there will be a link in the show notes for you to go look at this, but you can Google it. The CME Fed Watch tool, magically, right after this happens,
Oh, really?
a rate cut in September basically now has a 100% possibility. In other words, the market is now betting we get a rate cut in September. There's a couple other factors, but one of them was Trump. The other one is inflation, cooling down, and Jerome changing his speaking, his focus, because the focus pivoted from inflation to, hey, boys and girls, Papa Powell says inflation's kind of looking good right now. And, let's start talking about jobs. And you had a couple Fed chairs come out and say, you know what? We can cut before 3%. Then 2%. Then Jerome in the last 7 days at a press conference said, it would be unwise for us to wait until we hit 2%. We have to cut before then. Otherwise, we're being too restrictive. So they're laying the groundwork for cuts. The actual number is a 94% chance of a rate cut in September. Trump is already acting presidential. I'm dead serious. He went and did an exclusive interview with Barron's, and then I forget where this other one came from. Did a lot of reading for this episode. He basically said, hey, Jerome, I'm not going to oust you before the end of your term. So he publicly said he wasn't going to fight with him.
Oh, I bet Papa Powell like that.
He did, but then he asked for something. Please don't cut before the elections. So he basically publicly put it out there. Bro, I'm not going to fight with you.
That is bold. Yeah. I didn't know this.
I'm not going to fight with you if you don't cut rates. Now, let's ignore politics for a second. My own personal opinion, don't cut rates before the election. Don't even muddy the waters.
Why?
Wait till after the election.
Because it could be looked at as a political kind of play to potentially Biden's camp to get more votes.
To pro-Biden, pro-Trump, pro-whomever. Yeah. I like how the Fed has always represented itself as a non-politically partisan entity. I think if they can hold off, and there's economic data saying they shouldn't, and the bond market is already betting they're going to in September, but I think they need to. I think that would be a strong call. Second, it supports our theory that you and I talked about earlier, that Papa Powell is playing for legacy and trying to kill this idea of the Fed put, where the Fed's just always bailing us out. Because the Fed fund rate today is more restrictive because inflation just ticked down again than it has been. So we're in the most restrictive stance that our government has had on monetary policy right now.
Ever?
Not ever.
Oh, okay.
Most restrictive in the last
40 years.
15 years.
15.
So let's dig into the bond market for a second, because this is where most of our debt is based off of. The 30-year fixed mortgage residential debt is based off the 10-year Treasury. So the 10-year Treasury also did something for us this week. The 10-year Treasury and 30-year debt, historically speaking, there's a 180 basis point spread, or 1.8%. So in other words, you can look up the 10-year Treasury. You can take that number and add 1.8%, or 180 basis points, And that's what 30-year debt usually is. However, like we've talked about on previous episodes, because of the risk in the mortgage market right now, the spread is much higher. It's like 2.8, 280 basis points. So there's about a 1% additional spread in there. And so if the spread washes out, we know that rates could automatically drop by 1%. When the spread drops out, when the risk...
Without the Fed dropping the rate.
Thank you. Exactly. Without the Fed dropping the rate.
And right now the rate for mortgages is at 7.5%?
No, we're at 6.8.
Got it. So it could already go to 5.8, which is game time now.
Did everyone just hear what the wisdom that Benji just dropped on you? That was the golden nugget, is that interest rates will have a 5 handle on it the second the spread drops out, regardless of what's happening with the Fed.
But then if the Fed drops it, then we're almost below 5? Oh, wait, they won't drop it by a point.
Well, let's go there. We're going there. It's like we've done this before. You're teeing me up perfectly here. So, yes, you are absolutely correct. Low fives, high fours is within our sights, most likely in the next 12 to 16 months, year and a half, with what we're seeing and with what looks like will be the presidential candidate. How that will happen is that the spread has already started crushing itself. The spread right now is 2.6. So the banks are already starting to pull some of that spread out. See, when there's confidence, they lower that spread. And as soon as the Fed starts dropping rates, the banks will start competing. Now, when we talk about the Fed dropping rates and we talk about a cut, we're generally talking about a 1/4 point cut. So in the Fed's projections at the FOMC meeting minutes, they projected 3 rate cuts this year. 3 rate cuts would be a total of 0.75 or, 3/4 of a percentage
But
point.
highly likely not going to happen. Or you're saying it is.
My feeling, this is a total feeling, this is a guess, and also a hope. I hope they ignore September. We get a 1/4 in November, and we get the Christmas bonus of a half.
A half?
Yes, just to start the year.
Wow.
So
it's for people that aren't like real estate people. That means 50% and then a 25% before that. That means 75. That's
0.75.
almost a whole point, right?
Yes.
So you go from potentially, if we're just
if we
using
go
our
from
6.8
yes,
to 6.1.
6.05.
Yeah, 6.05. And then that's on top of the natural lowering of the rates by the banks because of confidence. So then
But I don't think the bank part will start until next year.
got it.
Okay, however, hear what Benji just said. You go from 6.8 to 6. Even that move right there would create almost a 10% bump in the average buyer's purchasing power. What it's setting us up for is this is setting us up for an unbelievably crazy spring of 2025 where you see above average appreciation because you may get multiple factors. A good stock market, inflation trending down, thank you God, I've been a good boy, lower rates, and confidence that a president's going to change everything around. Those are multiple factors that support a stronger 2025 on a transaction basis and on an average price basis.
But couldn't you say, maybe even more so, this winter can be a great window of opportunity?
So let's go there.
Are we done with the notes now?
We're bouncing around in the notes. Okay. It's perfect. We know winter's always an opportunity for our investors. And if you've listened to us before, you've purchased during the winter. I will be purchasing this winter. I told Jennifer that runs our sales team this week, I said, we're going to make 500 offers before the year is out. And she goes, what? And I said, think about this. I was like, it's the second week in July. If we make 500 offers, she's like, where are we going to make them on? I said, it's just a ridiculous goal. If we make 500 offers, would we get 10 to 20 unbelievable deals?
Yes.
And she's like, absolutely. That's the whole point. Is we're going to go when there's still a little fear as rates are trending down.
Because they're not all subscribed to your channel, so forget them.
Exactly. If you're not paying
deals.
attention to these macro and micro trends in your market, you're missing out. Every year we buy late third quarter and fourth quarter to set up the next year. Every year. This year we're going to go in 4x, 5x harder than normal to try to get even more deals when there's a little fear, because I feel like the wind is in the sails and low interest rates are coming. And when you look at this for land development, it means there's going to be more demand for lots. When you look at this for flipping a home, more demand for that home. I told my partner, Tony, in Everett for multiple Dadu sites, we dug the water lines, the sewer lines, and next week they're pouring the foundations. And I called and I said, do not start building those homes. And he goes, bro, why? And I said, because there's no point in it. And he goes, what are you talking about? I said, we're going to make so much money in the spring. I said, we're not starting even building those until December, because it only takes us about 90 days to finish them. Then they'll be finished April, March, April. Boom, right in the height of the spring market as the bidding wars are hitting. And we'll just ride the wave. What I'm telling all of you right now is we're chasing mavericks. Okay, I'm talking those giant surfing waves that come in off the coast, where they're those 60, 80-foot waves. They're as tall as buildings. And I need you to paddle out and get in front of this, because this thing's going to lift you and push you towards this.
Can I recap this a little bit?
Yes, please.
Okay, so the playing field politics-wise, right? And how this affects real estate, that's what we're talking about.
Yes.
If by some chance Biden wins, he still doesn't have a lot of confidence from the people, right? Maybe he gets some votes, but there's not a lot of confidence. So there still might be fear. And he's really not pro-business. He's kind of tax the business people, tax the billionaires or whatever, which, some people would say kind of hurts everybody, right? Whatever. So the opposite side, the more likely side right now, based off of the numbers and polls and just sentiment from people we talk to, is that Trump's in. He is pro-business, pro-real estate, pro-lower interest rates. I'm going to get to that too, how significant that is. And he's already talking like a president, talking to people that the president shouldn't talk to. But he's like, hey, Papa Powell, I'll keep you got job security with me.
He's already out,
right?
Working with the people, working with his troops, working things forward.
Now, there's a whole population of people that are very confident that he will win, but the ones that I think matter right now in terms of our conversation are the business people, the finance people, real estate people. The savvy ones are if this guy gets in, it's going to be on like Donkey Kong, but rates will go down.
Yes.
And so you could say that this is why the timing, you rarely want to time the market, but you could almost see it based off of past things and what Papa Powell is saying. Because whether he lowers it in September or not, it's very likely going to go down because we kind of need it to go down.
Bingo.
You don't want to wait, because if there's deflation, it goes below. So he's trying to hit this window of time. Regardless of everything that happened with Trump, regardless of politics, he's just trying to do his job anyways.
Yes.
And so the end of this year could be some of the best deals maybe in the next few years.
I want to be real specific. Yeah. This is our 2012.
Yeah.
So when people go, man, I wish I would have bought during the Great Recession. 2012 was the bottom of the Great Recession.
Yeah.
This is most likely the bottom of the real estate market within the next 12 months.
So then, there's going to be great deals, but beyond that, interest rates both on the Fed side will go down, and then, as you said, the banks will probably start going down too, right? That spread is going to go from 2 or 3 to maybe 1 to 2 or whatever. So those in combination will bring rates down. We're already looking based off of that, 5 or maybe below 5. But then you better believe, this is one thing I do believe, Trump will probably try to drive those even further down. He
totally will. Absolutely.
Okay, so then, so think about this. We're already going to probably start having some appreciation, which everyone just kind of does love. If you own a home, right?
Yeah.
Or you're buying a home, you love that your home is getting more. So people are yeah, let's go for it, right? Yeah. Trump, if he's friendly with Papa Powell, he's not supposed to do this, but naturally these conversations can potentially influence things. Rates go even farther down. So the deals you get this winter are even better deals.
Yes.
You know, hindsight, looking back at it from like a year from now, 2 years from now. But then appreciation is going to go up. So guess what happens? The fear of missing out, the
Yes.
FOMO.
Yes.
And if there's interest rates getting lower, this is the other thing that hasn't happened
Yes.
in 2 years that's really affected the supply and demand. Starts unlocking new buyers.
Bingo.
Who were trying to sell their homes, because now if it gets below 5%, it's flirting with 3 to 4. It's like, I'm okay with 1% more. And then supply and demand is back to potentially a normal.
Yes.
You better believe developers are going to start building a lot of houses. People are going to be selling and
Yes.
buying houses. Interest rates are down. It probably won't be like these 1 or 2% era, probably never again.
No.
But still, if you just get to the 4%,
Yes.
then agents, mortgage brokers, investors, buyers, sellers, everyone's busy again.
Yes.
As long as there's confidence, and of course we don't hit some other hiccup. But for the next 12 to 18 months, very likely that things are turning.
Yes.
And that's why this is kind of a significant, I wasn't even expecting this. I was like, oh, so what do you think about what happened, right? This is kind of a big deal.
This is an unbelievably big deal because there's only moments in opportunity when market dynamics support growth. And when market dynamics support growth, that's why I said we're chasing mavericks. The wave will naturally lift you. So if you're a real estate agent doing transactions and the US is at 4 million, it goes to 5 million, your business naturally goes up. If you're a lender doing loans, your business naturally goes up. If interest rates get low enough, all of a sudden those lenders also get a lot of refinances. Plus title and escrow gets all of these business, plus the home inspectors, plus the construction industry. I mean, it's just this giant domino effect. And then what happens is the investors get higher rents and to be able to refi, and they also get to be able to build more projects. I just sold a project for a large multifamily in North Seattle, aka Shoreline, and this is a $5 million piece of land. So this is real money, big money, large investors. And our conversation yesterday was, they said, you know what, we think this is a great deal, but it doesn't make sense to start the construction today, to start the entitlement today because of rates. And I said, well, I think the winds are changing. And they said, and had the briefed version of this discussion with them, that's what my insiders get, they get to hear this stuff first, is the winds are changing. And they said, you know what, we're going to pay for this in cash because we also believe the winds are changing. And we're going to buy this, and then when they do change, we'll start this project. So all of a sudden, that'll allow more inventory. And that psychological barrier of low 5s or high 4s removes the possibility, not all of it, but it will remove some of that lock-in effect with the move-up buyer that is selling their starter home to move to the next home. That'll bring in more inventory. So as our economy starts to slowly, possibly slide into a recession, like we may look back and say the recession already started right now. Real estate will actually come out of its recession and boom.
And what happens during a recession anyways? Interest rates typically go down. I've heard that interest rates go down in recessions typically happen because the Fed is trying to make up for this downturn by preemptively whatever. I mean, I'm not a Fed
No, you're
expert.
nailing it.
Yeah, so right now, even if the numbers are showing we are in a recession or could be going into a recession, well, that would be another trigger for the Fed to lower interest rates because they want to help save it. Because it's just so hard right now for commercial real estate investors, even just people trying to buy homes. Like that's the whole gamut.
The whole gamut is just unaffordable. It's unaffordable. The numbers don't make sense. So if Trump gets in, or almost now we can say when Trump gets in, here's just some things to be thinking about. One, lower rates. Regardless of Trump, we're heading into a lower rate cycle. Going back to the 10-year Treasury, the 10-year Treasury had this support sitting at around 4.20 or 4.2%. We broke that.
Before the assassination attempt, correct?
Post.
Oh, okay.
So that's broke that downward trend, which is going to naturally force the 10-year down, which naturally pulls down mortgages.
Rates.
So the outlook: 1, real estate transaction recession will go away and transactions will go up between 10 to 20%. 2, above average appreciation. 3, the marginal buyer returns. 4, that's going to put pressure on rents also. So rents should be flat through the remainder of this year and the beginning of 2025, but I believe by mid-2025, you should see the start of potential significant rent increases, also because the lack of multifamily supply. Next, we know he is a lower tax individual, so he will work on getting lower taxes. For us in real estate specifically, there's a tool that I've used and a lot of our big investors have used, which is called a cost segregation study, which is you look at the depreciation cycle, you go and have a cost seg done, and they figure out what they can accelerate the depreciation on, and they accelerate it so you take more depreciation faster. What that does is that gives hardcore investors like me large write-offs. I'm talking hundreds of thousands of dollars in write-offs. The biggest one we ever took was $461K. I mean, we're talking a lot. Bonus depreciation was on its way to phasing out, and there's a bill that's sitting there right now that's almost done, that's percolating in the background to bring bonus depreciation back up to the 100%.
Definitely going to come back with Trump.
Boom. So that's coming back. He was also talking about like grabbing Jamie Dimon for U.S. Treasury. Like, he's acting presidential. It's like we got Trump 2.0. He's acting presidential. He's acting like he's already running the country. He's saying the right things. When Biden was fumbling the ball, he just got out of the way and just let him do it. So I believe this is what's coming. And then remember, we're going to be very pro-business, which means right now, businesses cannot write off R&D. So if you spend money on future research and development, you can't write that 100% off, which means you spend money to develop the next phone, you can't write off that.
But with Trump, he's going to deregulate because he wants to push innovation.
Bingo.
And part of that also will be, hey, if we want to push innovation, let's make it a write-off. And like when I say it's on like Donkey Kong, I mean, you could say that in so many parts. It's kind of crazy. Because, by the way, we're not trying to paint this positive picture about Trump, right? We don't necessarily, I think you can probably assess where we lean politically or policy-wise, but we're not trying to just be, this is just based off of his past decisions and actions and what he stands for. And not as much about what he's even saying, because anybody can say anything, right? Same thing with Biden, right? What he's done before and what he's actually doing right now. And then we're not the only ones. Yeah. Other business people, other investors, other finance people are thinking the same thing. And this is why, I mean, the one thing I know for sure, because, you know, of course, I make a living on social media, on YouTube. So I've been paying attention and seeing something completely different that I haven't seen directly related to politics. More people willing to come out and support Trump publicly without any kind of shame, without hesitation. They almost be like, I mean, I saw one guy take a picture and he was wearing the MAGA hat, the Make America Great hat, the red. That's like the most the most like out of the closet thing you can do, right? And he was on a sidewalk outside, right? He's like, I've been hiding this forever, and now I feel comfortable and I feel courageous enough to wear it and support Trump. You're just seeing that so much. So this isn't kind of hypotheticals or guesses. This is like the writing's on the wall on social media, right? So, I mean,
both of us went and took the temperature of the U.S. consumer and the general public. And the temperature is right now pro-Trump. And pro-Trump means pro-real estate. As simple as that. And what I'm just telling you is don't wait. If we see the writing on the wall, that means the opportunity is before it happens, not after it happens. Because what everyone wants to do is they want to wait for the dust to settle and everything to be perfect. Opportunity is in the eye of the storm where it's calm before everything happens. So that's why I was, joking, but not joking. I was like, we set a goal. Make 500 offers before the year is done.
And that's why investors right now, or anybody in real estate, should be contacting you right now, because the winter is coming, right? Sooner than you think. And that's before the crazy uptick, appreciation, and the business. So how can people get a hold of you?
You can reach us at resg.com and 425-249-0214. Don't expect this to be like the stock market and happen overnight. People forget real estate is this really slow moving vehicle. It doesn't just go pop, and go up 20% in a day. As it rises, that will happen over a 6-month window. It's slow. So don't get our social media, our microwave society, the stock market confused with real estate. And then the last signal, the only other one I was going to get to, was all you had to do was look at Bitcoin. Bitcoin is its own version of like the fear index. And all of a sudden, Bitcoin rips. And as Bitcoin rips, that is the younger generation saying, I believe in the future of America.